So how can you gain in IPOs without investing in IPOs? The strategy which I am going to describe takes me just around 5 to 10 minutes of research and is a very high probability and a low risk strategy. Only and only when I have the utmost clarity of low risk and high reward, I put my money. My way of investment in stock markets is purely academic in nature, and what happens in that approach is my fund size is small, my risk tolerance is small. So the moment the money at risk is small and the risk is also small, you ultimately cannot become rich. You might have an outstanding return. You will not become a millionaire overnight. You will be in a slow and steady path towards learning how stock market investing works. So what is my strategy? As I described, my strategy does not take much research, but that comes with the experience which I have about stock market investing. Essentially, whenever there is an IPO buzz happening around, I do not subscribe to the IPO. I wait for the listing day. Just before the listing happens, I check 3 things. First is a very common thing which a lot of people check, which is the grey market premium. Now, if you're not aware about the grey market premium, it's like what is the premium the stock is trading at in the grey market. Now, what is a grey market? It is not the formal market, and as the name suggests, it is not very mainstream in nature. So it's like a mock test for the IPO. If you have a positive grey market premium, there is a very high chance that on the listing you will have a positive return on that stock IPO. That's signal number 1. Signal number 2 is the nature of the business. If you feel that the business prospect is good, then you have a positive signal number 2. Now, how do you find that out? That is your skill. That is an art, not a science. Third thing is, what was the subscription? Was it 2x, 3x or 5 times subscribed? You can have a very high subscription but might not get positive returns on the listing day, and you might have a very tepid kind of subscription but you still might get positive returns on the listing day. So this is a very fuzzy area. You have to have an intuition about these things. Once you have 3 positive signals, or rather let's just take 2 positive signals out of the 3, you move on to the second last stage. What is the second last stage? You go on to a trading platform just few minutes before you put your money into it. Check that trade lots. How many people are selling? How many people are buying? Now, I use a full service trading account, so I get these information pretty easily. And I don't know about the discount brokers. If they have such facilities where they give you what is the trade lot, how many people are buying, how many people are selling. After I gain confidence that yes, more people are buying than selling, my task is almost done. I put my money and wait for the stock price to go up. Ideal scenario is I do not just wait. I set up an automated order on sell. So whenever the price crosses a certain percentage, for me it's around 12 to 15%. So whenever I gain 12 to 15% on the listing day, I exit out of the market. So this puts an upper cap on my investment returns, but I'm willing to do that because in just a matter of few minutes or sometimes few hours, I have around 10% or 12% returns, which is fair enough for me because I am not putting an in-depth research into that investment. It's just a 5 to 10 minutes of work for me, and I am sitting on more than 10 to 12% of investment returns. The moment I increase my fund size and increase a bit of my risk tolerance, I will have substantial gains at a higher risk. That might not work for me, it might work for me because the risk which you take has consequences and it's not a lottery or a gamble. It's just how numbers and probability work. I've already made a video on how I implemented this strategy on Zomato. So if you haven't checked that video out already, do check it out.